Yeah, Ashit, we can start.
Yes, Harsh. Okay. Good morning, everyone. Good afternoon, everyone. So, as we have discussed, the topic for today's discussion is the myth and facts relating to NPS. In NPS, there are a lot of myths, mainly primarily because NPS as a product has evolved over the years. Initially, it was only available for the Government of India employees. Over the years, it has changed. So, the primary myth that evolved regarding NPS is its eligibility. Who all can open NPS account? Is it only for the government employees? Is it open for the central, other than central government employees? Can a self-employed individual also open their NPS account? Or as a parent, can I open NPS account for Vatsalya? So, along these myths, we have Harsh Pratap with us who will help us to debust or provide us the real fact regarding these myths. Over to you, Harsh. Yes, Harsh, over to you. Harsh, you are on mute.
Yeah, hi Ashit. So I think like what Harshit was mentioning, this session is more about talking like we have a different perception about the product. Uh, but because while interacting with a lot of subscribers, a lot of customer of NPS and a lot of other investors or different kind of people, they have different kind of opinion about NPS as a product. But you know that this product is being regulated by Pension Fund Regulatory and Development Authority (PFRDA). They create all the rules and regulations for this product. They decide the kind of benefit subscriber will get. They decide the kind of flexibility this product can have. They decide every other aspect of this product. So it is not a product which is like defined and designed by any financial institution. This product is defined and designed by the government of India through a regulator called PFRDA. So, like initially, people were thinking this product is meant for the state government, central government employees, and it is only for them. Then perception changed over the period of time. A lot of corporate subscribers or a lot of corporate employees are being part of this product. Because in India, we do not have any social security kind of a scheme. That is why the people are also opening their NPS account, saving money for their retirement, or once they stop earning, that money can be utilized for them to manage their life. But in today's era, NPS is not only for retirement, but also it plays a very big role for investment, which we discussed in our last session or discussion we did 15 days back. So we thought why not to discuss about few myths. So NPS is not only for the government subscriber. Any citizen of India can open NPS account, avail those benefits. For example, somebody who is working in any corporate can open NPS account. Anybody who is self-employed can open NPS account. Government employees definitely can open the NPS account. And the recent addition is NPS Vatsalya. It means that any any
I think we just lost Harsh because of some network issue. So as Harsh was iterating, so NPS Vatsala is primarily for those set of individuals who are below the age of 18. So I started my NPS account at the age of 28. So would this have been the case where my NPS account or existing NPS account already had a corpus of say 5 lakh, 10 lakh rupees? Would it have been opened in my early years or my childhood years? Then this particular corpus would have helped me in in a lot of senses with the help of power of compounding. So that was the primary reason why NPS Vatsalya was introduced. Other than that, NPS has recently been introduced for the gig workers. So any individual platforms like Zomato, Swiggy, or a few of the individual partners like urban companies have started providing the services of NPS for their gig workers also. So this shows that NPS as a product is not only for the high income individuals or medium income individuals, it is for anyone, be it you are the non-worker, be it you are the child, be it you are the individual working in a gig workers or gig economy. So NPS has been available for all the set of individuals. Moving ahead, so there are a few set of myths revolving around the charges. In terms of charges, there are myths like NPS as a product is an expensive product. It is more expensive than that of mutual funds. NPS as a product involved a lot of hidden charges. For example, at the time of account opening, while if I suppose don't contribute throughout the financial year, there'll be some penalty on my NPS account, and there are some hidden charges at the time of exit. So, debreaking those set of myths. Debreaking those set of myths in NPS as a whole ecosystem, there is an overall charge of 0.3 paisa. Yes, Harsh, over to you.
Yeah, Ashish. So what Harshit was mentioning about the gig work economy, na, because they people are actually contributing a lot of value to our economy. We have seen the number of gig workers today. We have Swiggy, Zomato, then different kind of platforms. So they are playing a very big role in terms of driving our economy, and the numbers are quite large. So PFRDA thought why not to we can offer NPS to them, and that is why it was started months back, and it is like going very aggressive or very good. People are like opting for this in a positive manner. So why talking about the charge? So there was a myth in terms of the kind of charges NPS is offering. If you will go for this product, the kind of cost I will incur, whether it's high, low, comparable to other product, how it is, right? So what I feel is this product is the kind of product which offers you the lowest cost product. It's the lowest cost product. And why the lowest cost product? The overall cost associated while managing my NPS account is only 0.30%. 30 paisa per annum as per my AUM. Whatever money I am having in NPS, I have to bear a charge of 30 paisa per annum. And if I will compare this with any other financial product, maybe we can compare with this mutual fund and all. So in mutual fund, the charge is in the range of 1 to 2%. And NPS is offering me something at a one third of the cost. So in terms of charges, charges are very, very less. Why? Because the government of India product, government regulates this, they decide the kind of charges this product will have.
Next up, Harsh, we have few set of myths regarding withdrawal or exit part of NPS. So many people think that is my suppose I have opened my NPS account. People have the tendency they feel that their NPS money will be locked till the age of 60, or they might not be able to access the money in case of any emergency. Is there any option for the investment in NPS where they can make a premature exit or an early exit? Or people at times think I will lose all my money if I don't exit at the time of retirement. Something, myths revolving around that. Can you help burst those?
Yeah, Ashish. So I request all the participants in case they have any query, we have the option available in our chat box Q&A where you can post your queries, and we'll finish the session in next 15-20 minutes, and we will address all your queries which are available in the chat box or Q&A. So see, NPS was seen as a product where the person is investing money and the money will be only accessible at the time of retirement, or maybe after somebody will turn 60 years. And because it involves a component called pension. So people were in the opinion that whatever money I will invest, I have to take pension. I cannot withdraw my money. What if I need money in between? What if I want to close my NPS account early? What if I need some lump sum money also out of my corpus? Suppose I'm a person who is investing in NPS for like last 10, 15, 20 years, and my corpus is 1 CR. Can I withdraw 50 lakh rupees for my use after retirement? Can I decide how much percentage of money I will use for the pension? Do I have option to close my NPS account before that also, before turning retirement? So all those kind of questions were in the mind of the people. And the best thing is NPS offers you a lot of flexibility in terms of withdrawal. So one important thing is now NPS is not having any kind of lock-in. So previously the lock-in was of 5 years. You have to be the part of NPS for minimum 5 years. Once you complete 5 years, you have an option to close your NPS account. But in today's era, there is no lock-in period. If I want to close my NPS account in like 2 years, 3 years, 4 years down the line, I can do it anytime. No lock-in. It is complete control within me. I can control everything in NPS. No lock-in period. Anytime closure is allowed. And if in case my NPS corpus is less than 5 lakh rupees, I can withdraw the complete money. Entire 5 lakh rupees, I can withdraw, tax free, it will come to me and my account will be closed. If I do not want to close my NPS account, I have an option of partial withdrawal. It is allowed on the self contribution. It means that if I am contributing from my own pocket, not the corporate contribution, but self contribution, and suppose my fund in the NPS is 10 lakh rupees, 2.5 lakh rupees I can withdraw in case of medical emergency, in case of marriage, in case of education requirement, in case of construction of house. So, like similar way, the PF is offering the kind of flexibility. Similar way, we can withdraw from NPS also. But there are conditions like you have to be the part of NPS for minimum 3 years. Then you can withdraw only 5% of your self contribution. And it is allowed like 4 times in the entire journey of your NPS. In addition to that, we do not need to wait for 60 years or date of retirement. If we want to close our NPS account, the government is now allowing us to close the NPS account once we complete 15 years in NPS. If a person of 25 years of age opening NPS today, when the person will turn 40 years of age, he is having an option to close the NPS account or continue the NPS account. A person can continue NPS account till the age of 85 years. That flexibility is there. Once you complete 15 years and then till the age of 85 years, any day, anytime you can close your NPS account. And the best part is up to 80% of the fund value we can withdraw. It means that we are creating a long-term wealth plus minimum 20% will be used for the pension. Pension is a guaranteed income after a lifetime. Whatever pension will be decided, it will be like for the person till the person is alive. And if they want to add a spouse also, they can add a spouse also. So it gives you the flexibility not only to secure a retirement, but also to create a wealth while investing for the long term in a government product at a low cost. Plus flexibility when you want to withdraw the money as per your need and requirement over the period of life. So different phases of life, we can be ensured that NPS is with us for our requirement when we need money. Yeah,
Thank you, Harsh. Thank you, Harsh. It was a great clarity as you have iterated. And for the audience, I would mention that majority of most of our audience comes in the age bracket of 25 or 30, where they don't look 60 as the retirement age. So this premature exit, early exit, or exit after 15 years of account opening will be helpful for them. Next up, at times in case of exit, people think that NPS exit is complicated or they need to visit the branches in order to initiate exit. And how long does it usually take to receive the money? For example, as you have mentioned, the account opening can be done simultaneously. But if I want to access my money, how long will it take to access that money?
see, people would have experience of withdrawing money from different schemes like life insurance schemes, mutual fund, other stuff. And I
Correct.
have seen like they have come across a bit of, I should not say all the processes are very difficult, but yes, in some of the financial products, the processes are complex. I have seen in case of normal withdrawal and plus in case of death of the particular subscriber, the nominee also face a lot of challenges in terms of getting money from different financial instruments. But in NPS, the things are pretty smooth. And I should say it's a kind of most easy process available in terms of financial product. Because see, the government want our subscribers should not face any difficulty when they want to withdraw the money. Because over the period of 30 years, 20 years down the line, people are putting money in NPS. And then when the time will come to withdraw that money for different use, the process should be very, very simple. Plus, the control should not be in the hand of service provider. Control should be in the hand of subscriber. So why we are saying it's a quick and easy process? Because control is in your hand. As an NPS subscriber, you have full control on the process of exit. The process is completely digital, no paperwork. The only thing is you have to log in your NPS account on the CRA website, because our customer might have NPS account with Protein as a CRA, KFintech as a CRA, CAMPS as a CRA. They can log in any of the CRA depending upon the attachment to that CRA, and they can log by providing their PRAN number, permanent retirement account number. Using the PRAN number, they can log in the system. There are the option called withdrawal. Within the withdrawal option, we have all the options available. Whether you want to for premature exit, whether you want to close NPS account, or you want to withdraw money as an option of partial withdrawal, or you want to do a mature withdrawal after 15 years of the time. All the 3-4 options are available. You can avail those options. The system is very, very smooth. All the information will be pre-filled. You have to just provide information to the system how much money you want to withdraw. OTP will come. You have to submit a OTP. You will submit a OTP. Though it is mentioned 7 working days, but once your service provider will approve the request, normally it takes 4 working days. The money will be in your account. So you will get a message also from the system side or from the CRA side that if today everything is verified, on 4th working day, money will come to your bank account. Plus, the multiple exit options are available because in NPS, we have an option now called multiple scheme framework, which we discussed in our last session. In that particular scheme, a person can have multiple scheme within same NPS account. For example, today I have one common scheme. I can say my one scheme is twice. Second scheme is my MSF, and third scheme is my MSF2. So I have 2 MSF and one, you can say 2 pension scheme and 1 common scheme with me. I can close my scheme at one point of time. So multiple exit options are available. System is like option is pretty smooth and in the control of subscriber. In case of death of any subscriber, with minimum documentation, nominee can get the entire money in his or her account. Again, few people are supporting in a great way. So it is a pretty smooth process. Yeah, Ashton, do you want to add something?
Yeah. That was it. Thank you, Harsh, for providing the clarity. And what I can see is that the exit process, last week only I was filing out my ITR returns. I think it is more smooth or smoother than filing your ITR return. And as you have mentioned, it is a complete digital process. So I don't think that I need to visit any branches. It can be done with the comfort of sitting at home, right?
Yes.
Yeah. So next up, the myths around the contribution. So few of my friends had opened their NPS account, but at times they find that a few of them are freelancers. They find that they don't want to have a burden to invest a particular amount on a monthly basis, or they find that NPS has a lock-in where you have to invest a certain amount on a monthly basis to keep your NPS account active. And they think that in NPS, since 50,000 was the deduction allowed, you have to contribute 50,000 rupees on an annual basis to keep your NPS account active. So can you specify like how is the flexibility in terms of investment, or can I invest any amount or whenever I want? How is the flexibility on the contribution?
So what I will tell you, like what I told you in between, like the control is in the hand of subscriber, right? So as a
Correct.
subscriber of NPS account, I have all the flexibility in my hand when I want to invest, how I want to invest, how much money I want to invest, how much, when, and how. Everything is in my
Okay.
control. So if I talk about like the ICICI Pension Fund, we have a beautiful product called SIP available in our system, where a
Mm-hmm.
customer can decide how much money they want to invest with a frequency of like you can do it daily, you can do it weekly, you can do it monthly, you can do it fortnightly, you can do it like half yearly, you can do it yearly. You can schedule it as per your financial goal or as per your investment schedule, and every control is in your hand. You want to change the amount you want to invest, that is also possible. So you can decide how many times in a financial you want to contribute. You can decide how much money you want to contribute. You can decide how you want to contribute through SIP or through a lump sum contribution. So
Thank you,
everything
Harsh.
is in your control. You can do it.
Okay. So moving ahead, talk about the returns and the investment choices. In the chat box also, I can see that how NPS generates wealth. Can NPS generate wealth as mutual funds, or how it is different from mutual fund? How much in I can have in NPS? Or people think that NPS primarily is a government product, so it has a high debt exposure. Do we have a equity exposure in NPS? Or I as an individual, if I have to track my NPS return, how I can do that?
See, the one question is like, while we are comparing NPS with mutual fund, why we are comparing NPS with mutual fund? So a lot of customers, a lot of subscribers are comparing NPS with mutual fund, but why? Because somewhere they know that it is comparable. Second is NPS is also having equity component and debt component, similar way like mutual funds are having, right? And of course, when we were talking about the cost also, we compare the cost of NPS and mutual fund. And we have seen the cost of NPS is very low as compared to mutual fund. So it means that people are having expectation. And somewhere back of the mind, they know that it is comparable in terms of returns. So if you talk about, if you ask my personal opinion, like NPS is offering, I should not say the best return, but I should say good returns. And why I am saying good and why not best? Because I read somewhere that our returns should be in a good range, and the investments should have a proper risk control. We cannot put our money in high risk investment, and we cannot have our day and night without peace, right? Because if you put money into high risk investment, you'll be like disturbed all the time. And if you are putting your money somewhere where you know that the risk is also being controlled by somebody, and that somebody is a government entity, and risk is being controlled in a proper fashion, then you have a lot of faith and you have a lot of peace of mind, right? So NP is the kind of product which gives you a lot of peace of mind. Returns are good, and I should say comparable also with the mutual fund, and returns of NPS are beating returns of many of the mutual funds. Because in NPS now we have an option to have up to 100% equity exposure available in the pension product or in the pension schemes. So for example, ICICI Pension is having one of the scheme called Dream. In that scheme, we have equity exposure up to 100%. And it is flexible. It means that equity exposure may go down also depending upon market conditions. And the fund manager will decide allocation of equity at one point of time based on the market condition. Otherwise, in active choice also, we have discussed the active and auto choice in last session. Active choice also, we have the option to take allocation of equity up to 75%. Rest we can put in debt, like government, security, and corporate bond. It means that in NPS we have equity exposure, similar way like we have in mutual fund. The only difference is while investing in NPS, we have government regulations, rules which we need to follow. There are certain investment guidelines issued by PFRD and NPS Trust. We have to follow those guidelines. In mutual fund, the situation is different. But given the cost structure and everything, returns of NPS are good. I request all the subscribers, they can visit ET Money, in which on a weekly basis, the returns of NPS are being published. They can visit NPS Trust website. On that particular website, returns of NPS are given. The long-term returns of NPS, like what I have seen of ICICI Pension, is more than 13% in last 10 years. Maybe in the region of like 12% in last 5 years. And these returns are tax exempted because in NPS there is no taxable, there is no long-term, short-term tax treatment available in NPS, though it is available in mutual fund. So returns are comparable, returns are good, the risk is taken care of in a regulated environment. Plus equity exposure, yes, you have an option to take equity exposure of your as per your risk appetite, and flexibility is you can change your equity allocation 4 times in a financial year. In case
Oh,
of common scheme, like in active choice, you can reduce from 75 to any amount to zero also. And mutual fund, so in case of mutual fund, it is not allowed. You do not have a control of reducing the equity exposure. And in case of pension scheme under MSF, the fund manager is taking a call and making it dynamic and without any additional cost. The same cost you have to incur like 30 paisa, and you will enjoy the dynamic fund allocation while investing in pension scheme and in NPS.
okay. So we can say that NPS has all the features and benefits of mutual fund. at a lower cost and at the relatively lower taxation policy that is applicable in NPS. So it makes sense that a subscriber should invest some corpus of their overall investment towards NPS, considering that it is government backed and relatively on a lower risk side. Thank you, Harsh. So moving to the towards the end, few of my friends and most of the members in the audience also, they think that currently anyone who's at the age of say 25 or 30, it's too early to start thinking of retirement or planning for retirement. So how NPS is relevant, or how anyone should start early in NPS? So can delaying in NPS or in investing in NPS, how would it impact my corpus? And ideally, what should be the best time to start planning for retirement or to start their NPS account?
So I wanted to just stay on this slide only for a minute. Like most of the people, when they join a workforce or when they start earning their first salary, or maybe when they start something at their own, or maybe when they start saving money while doing some kind of different jobs or some kind of economical activities, right? They always think of like investing or not investing, but enjoying that money and buying stuff or fulfilling some of their you can say aspiration, but they are not thinking about investing at first. Even if they are thinking about investing, they are not thinking about investing for the long term. And I always feel NPS is the only investment which we are making for ourselves, because in case we are creating a wealth by investing in mutual fund or by investing in money in the, you can say, physical asset like gold and property, for whom we are
Correct.
doing it? Maybe we are doing it for our future generations. If in case we are investing money in mutual fund, why we are investing money in mutual fund? To manage our short term, long term goals. The goals are maybe for my kids' education, maybe for purchasing of house for my family, maybe for marriage of my kids, right? Everything we are doing around the family. But are we doing or are we investing something for ourselves? So NP is the kind of investment where I am investing money for myself, because I know that once I stop earning, this particular fund will give me money to manage my post-retirement life or manage my life when I stop earning. So that is why it is very, very important about to think about NPS. Second is, what is the right time? So I was discussing with somebody like very senior person today only. So he was talking to me like market is going up, down, where I should invest, when I should invest money. So I was telling them ki every day is a good day, every time is a good time, because Indian economy is like growing. We have good faith on the Indian economy. Money invested today will multifold in coming years. And if you're thinking today that shall I invest or not, shall I start or not, then you are already late. You could have done this yesterday,
Okay.
because you have wasted your one day. So I always suggest people to start it as early as possible. Why? Because the long term investing will give you power of compounding. And power of compounding means after 10-15 years down the line, you will make more returns than your annual salary. You will make more returns than your annual saving. Your money may double in 6 years if you're getting a returns of 12%, which NPS is offering as a long-term returns. The money will double in 6 years. My 1 CR can become 2 CR in 6 years. My 2 CR can become 4 CR in 6 years. That's the power of compounding. But we have to reach out to that level, right? We have to start early. Yeah, we can move to the next
Correct.
slide.
Correct.
So
And as
this
yeah.
is what we have created. A small illustration on something like if somebody at the age of 25 years start investing 5,000 rupees per month, but he's thinking, why do I invest 5,000 rupees? I have enough time. I should start after 10 years. Or somebody 35 is thinking, yeah, I have a lot of responsibilities, family responsibilities are there. Why to invest money? Let me use this money, maybe I have another 20 years. You can see the declining trend of overall fund value the person can realize. So somebody at the age of 25 investing 5,000 rupees per month will get a corpus around 3.5 crore. And as I was telling you, at the age of 60, I have 3.5 crore.
Correct.
At the age of 66, I will have 7 crore. And if
So
I'm delaying it
correct.
by 20 years, I will get 25 lakhs only. The huge difference in terms of the kind of money I can accumulate. So I was talking to one of the young girls. What is discussing how he is investing his money, like he is investing his money on this weekend trips, weekend parties with the friends, and he is investing money like some kind of other habits or daily habits kind of thing. Like some of the people are smoking also, some are having some other kind of, I should not say bad habit, but kind of habit they are having. And every day they are investing some 100, 200 for 500 rupees per day kind of thing. If that money is saved, if one weekend you will sacrifice for what? For a life which will be after your retirement once you stop earning, the time when you will not have any income. For that, if you sacrifice a bit today, your tomorrow will be much shiner, much in control. You can manage same lifestyle which we are having today. So you have to start as early as possible. If today you are thinking you are already late, do it today.
Rightly iterated, Harsh. So as matlab, if we have to conclude, we can say that the best time to start NPS or retirement planning was yesterday. If you have not done that yesterday, the next best time will be today. So,
So this is what I thought we have at the last slide for all of you. So there were certain myths in terms of the cost. What is the cost, whether it's high or low, and it is transparent whether I know or not. It is very much transparent. The second was like we discussed about whether NP is for me. Yes, it is for everybody. It is for the citizen of India. Even for MSME employees, we are driving NPS. For gig worker, we are driving NPS. For self-employed, we are driving NPS. For corporate employees, we are driving NPS. For government subscribers, we are driving NPS. So NPS is for everybody, even for the kids. And then we discuss about returns and equity exposure. Returns are pretty good. Equity exposure is in control of the subscriber because this is an account where you have control in your hand. That is the best thing about NPS. And flexibility in terms of withdrawal option. When I need my money, I can access my money. And everything is digital at one click, available in your mobile, smartphone also, and your laptop and desktop. It means any day, anytime you can access your account. At the time of requirement, you can withdraw the money. You want to close NPS account, you have no lock-in. Of course, equity is in your control, the amount of equity exposure you want to take. Tax benefit, definitely they are, because it's a government approved product. Government is controlling this product and they have given a lot of tax benefits. Maybe we can have other session on the tax, exclusively on the tax benefit part. But yes, NPS is the product which gives the maximum tax benefit available in India. Jarshit, any last comment and we can conclude the call?
I think it was a really elaborative and detailed Mythbuster session from your end. Uh, Parallelly, along with all the questions that we have answered, there have been few questions in the chat box and the Q&A. I'll try to break down few of the questions so that you can help answering the same. So, one question is from, can you explain the default scheme you have in ICICI for NPS? Is there any default scheme for the subscriber that they can opt for the ICICI and NPS?
So I tell you that there is no default schemes. A scheme need to be selected by the subscriber when they open the NPS
Okay.
account. And again, I'm telling you, it is like your choice because every person might have a different financial goal. They might have different risk appetite. They might have different family structure. They might have different earnings. They might have different saving rates. So every person can decide the scheme allocation. They want to invest, they have to decide how much percentage of money they want to invest in equity, corporate bond, and government security. They can take active choice, auto choice, and pension schemes. If you do not know what to do, my suggestion is go for the pension scheme. We have very good pension schemes available, like My Family, My Future. The good one, you can take it. And my fund managers, I am sure they will take care of your money in a pretty controlled manner.
Sure. Thank you. Next up we have talking about the tier 1 and tier 2. Is it better to have both NPS schemes, tier 1 and tier 2?
So again, my request is you have to understand what is tier 1 and tier 2, and whether you have to see whether tier 1 is mandatory and it is like compulsory, and everybody should have the tier 1 account because that is a long-term account for securing my post-retirement life. This is the account where I am investing or saving my money for the long run, tier 1. So tier two is a kind of investment account where you have a flexibility to withdraw at any point of time. You have flexibility to contribute at any point of time, but there is no tax benefit. So tier two is not for everybody. Yes, those who are investing money in different financial instruments, they can open the tier two account and can have the exposure of it. But those who are looking for saving for retirement, tier one
Mhm.
is mandatory. So tier two, you have to
Okay.
access as per your individual goal.
So we can say that you can invest in tier two and for the flexibility part, and for investment in tier one will be for mainly for the retirement planning and the wealth generation part. Next up, I think this was already answered, but if you would like to highlight on it, if a corporate employee invest a certain amount every month, but if he missed for 5 to 6 months and then again want to start the investment, is there any penalty that is involved?
See, what we discussed about the cost wala part and all. So there in NP there is no other charges, there is no other penalty, nothing is there. That is your account. You can start, you can stop, you can invest, you can decide when and how much to invest. There is no penalty at all.
Okay. So another question is from one of the corporate employees only. So they had opened their NPS account in 2017. They have does the 15-year normal exit clause where they can withdraw 80% towards lump sum and 20% towards pension. Will it be applicable to the corporate employee also if they complete 15 years? There seems to be some confusion that it is only applicable for retail or it is not applicable for corporate. How is it ahead?
See, this is applicable for all the NPS subscribers. They can avail this
Okay.
option except the government subscribers. The corporate subscribers, retail subscribers can avail this option once they complete.
I think we just lost Harsh from the network issue. What Harsh is trying to reiterate is that yes, even a corporate subscriber can avail the option of normal exit after 15 years. The condition of 15-year exit is not applicable only and only for the government subscribers. For rest of the sectors like corporate and retail, it is applicable. Next question, Harsh, we have. I am a 62-year-old. How and when I can start my SWP? Is it necessary to take annuity or not?
See, ultimately, this is a Government of India product, and we call it National Pension System. The objective of this product to provide pension at the minimum level so that they can manage their day-to-day life or day-to-day expenses in a proper shape and proper way. So pension is mandatory. You have a flexibility that you can withdraw up to 80%. You have withdraw over a period of time till the age of 85. Both options are available in the hand of subscriber. It is not that we have to wait till the age of 60. Either 60 or date of retirement or completion of 15 years, whichever comes earlier, you are eligible to close your NPS account maturity with maturity, where IT up to 80% you can withdraw either in one go or you can start withdrawal up to the age of 85. 20% minimum will go for pension.
Okay. One thing additional I would like to highlight for the previous question where it was asked for the normal exit after 15 years. For the corporate employee, if they are not able to initiate exit under corporate scheme, what they can do is they can move the sector from corporate to retail, and post that they will be able to initiate the exit in terms of the corporate or in terms of the 15 years lock-in. Next question, Harsh, we have a person who joined the service in the year 2020 due to certain personal reasons. If he is resigning and his corpus is less than 5 lakhs at the time of resignation, then can the subscriber withdraw 100% amount? If yes, how much amount would be available to him? How much would be eligible for the pension? And if he can withdraw partial withdrawal from that amount also, how the case would be?
See, we have discussed about that there is no lock-in period. Anytime if you want to close your NPS account, you can do. If your money is less than 5 lakh rupees, you can withdraw the full amount. If you have not completed 15 years, it will be counted as a you are eligible to do that, and the entire fund, whatever is available in the NPS account, will come back to you. And process is simple. It is not linked with your resignation. I should not say ki like you have to resign and you have to close your account. It is not anywhere linked with the resignation. It is like you have the NPS account, you want to close it, you can do it. Simple. If the amount is less than 5 lakh rupees, you can withdraw the full amount. No taxation, full amount will come to your bank account. No charges, no penalty.
Okay. So, Harsh,
Yeah, we
another question regarding
can take
exit
question.
is there.
Yep.
Another question regarding exit is there. I think there is a lot of confusion regarding, as you have mentioned that after 15 years I can close my NPS account. Suppose if anyone has opened NPS account 15 years back, would that same update or new condition be applicable for the previous set of subscribers also, or is it applicable only for the new subscribers?
Again, it is applicable to all subscribers. All means all subscribers who are a part of NPS ecosystem today.
Okay.
If today you have completed 15 years, you are eligible to close your NPS account if you want to do so, or you can continue till the age of 85. Any day, anytime you can close the NPS account. It's applicable to everybody.
Okay.
Yep.
So
Next.
one of the subscriber has specifically asked for the expected pension that they can expect. If a person starts investing at the age of 45 and retires 60, how much they can expect to receive? How much is paid in lump sum, and how much they can expect in annuity?
So my request on this is like it's a very broad topic. Maybe in one of the sessions we'll definitely cover this. So pension depend upon multiple things like your age, your spouse age, the kind of looking for, joint life, single life, whether you want return of capital also or not. So it depends upon multiple things, and it also depends upon the kind of fund you have. Our next session, maybe one of the sessions we can dedicate on exit and different pension schemes available to our subscribers.
A last few set of questions, Harsh. Subscriber has opened their NPS account with the help of employer. Can they, as an individual, also contribute in the same account? Additionally, what if they can also maintain Vatsalya account parallelly, or they have to? How would the process be for Vatsalya or for the individual contribution?
See, what we discuss is NP is the kind of account where the control is in the hand of subscriber, right? This is my NPS account.
Correct.
Even if it is with the corporate, if it is linked with the corporate, it means that I am giving a authority or a kind of, you can say, flexible to my corporate. They can contribute in my NPS account. But yes, if I want to contribute myself, I can do so. So in addition to the employer contribution, employee can also do the self contribution. It is allowed. They can do it by themselves. They have to just log in the NPS account, or they can visit ICICI Pension website. We have an option to set up SI also. We have an option to contribute lump sum also. The options are available on our website. You can do so. You can avail those options. Plus, the second question is like Vatsalya. See, Vatsalya is a different account. It is the account, right? So, for example, if I have my two kids,
Correct.
I can open my do both NPS account, NPS Vatsalya account using my own credential as a parents. So you can open the Vatsalya account
Okay.
along with your NPS account and can maintain both of them and so it is allowed.
So we can say that Vatsalya is independent
And
of the
last
individual or
question,
the corporate account. Yeah. Next up, we have uh, can a subscriber switch from common scheme to MSF? If yes, what would be the process?
you see, common scheme to MSF switching. We have to understand the multiple scheme framework. In the multiple scheme framework, we have different schemes. We are having common scheme where we have active and auto choice. Then we have pension scheme under MSF, right? So in pension
Mm-hmm.
scheme, we can opt for the pension scheme. There is no option of switching. It means that I have my NPS account, I have my auto choice. I want to also additionally contribute for a pension scheme. I can opt for a pension scheme. It will not be a switching of my account. It will be
Okay.
like adding another pension scheme in my NPS account. So today, suppose I have auto choice. Auto 50 is my default option available today. In addition to auto 50, I can also add a pension scheme. And my future contribution will be like 50% of my NPS account. I can decide whether my future contribution will go for common scheme or pension scheme. And how to open a pension scheme account.
Mm-hmm.
Process is very simple. Either you can visit the CRA website, you can log in an NPS account, you can do the contribution also while opening a new pension scheme, or you can visit ICICI Pension website also, and our website also the option is available to open a common scheme.
Okay, so we
Either
can
through
say
CRA
that.
portal or through the website of ICICI Pension, you can do so.
Got it. So we can say that MSF, though the plan number for both the cases will remain the same, the funds in common scheme will be still in common scheme. If you want subsequent contribution, you can opt for that subsequent contribution MSF. Okay. So next up, suppose when I can withdraw from Tier 1 at the age of 64, is the amount withdrawable? Is the amount withdrawable tax free, or is it taxable? So any individual who withdraws
See,
at the age of say 64 or after retirement from the tier 1 account, that amount, the withdrawable amount or the lump sum amount, will it be taxable or will it be tax free?
see, for the corporate and retail subscriber, allowed limit is up to 80% you can withdraw. It is
Okay.
allowed. For example, I have 1 CR of the fund, 80 lakhs I can withdraw, up to 80 lakhs. But the current taxation rules are up to 60% will be tax exempted. It means that my 60 lakh rupees will be tax exempted. That additional 20% means additional 20 lakh rupees, which I am withdrawing,
Mhm.
will be taxable as per the tax slab. Because this is a recent addition and income tax has not given a clarity on it. So the current stand is 60% is tax exempted, additional 20% is taxable, rest 20%, minimum 20% will go for the pension. So there's a bifurcation of 100%.
Okay. So Harsh, there have been few questions involved regarding SWP. I think it's a broad topic. Would request if you can have a detailed discussion on SWP in the
So
subsequent presentations.
in next session, maybe we can take it on
Sure.
withdrawal and pension connect session. Maybe we can take it.
Last up, one query is from
And the last question we have, we
Nitin
can take. We
sir.
have 2-3 minutes more.
Yeah, Nitin sir, I think this query
Yeah,
revolves
this one a
around the
broad
service request.
one. It's like I can see it. It is like you want to set up a SIP using iMobile and want to do a monthly contribution, this and that. So my request to Nitin is, see, it is possible if you have ICICI bank account plus NPS ICICI bank, it is possible to do so. I request you can connect with your RM. You can log in iMobile application. You can see your relationship manager, contact details and all. They can help you to do so. So the process, it is possible. And from your salary directly, it can be deducted if employer is having that facility available. That has nothing to do with the bank account. But yes, from your bank account, you can set up a SIP on a monthly basis. You can decide amount. That amount will be contributed in your NPS account on a monthly basis. That's possible. So my request, you can connect the ICICI Bank RM, or maybe if you can share a mobile number with us, maybe one-to-one chat and all, if it is allowed. I don't think so. We can also help you.
Sure. Thank you, Harsh. Thank you for a detailed session regarding the myths around NPS
I
and
think we
how
can take
NPS.
last. We have one more last question. We have one second. We have last question. We have one more minute. We can take last question. It is like, I am 52 years old, enrolled in NPS to my employer when I was 51 in April 2025. At present, I contribute 50,000 per year, which is approximately 10% of my annual CTC. There is this few question. Can I increase my employer contribution up to 10 to 14%? Answer is yes. You have to check with your employer. If employer is having that facility to increase it up to 14% if you are part of new tax regime. And of course, if you will increase your contribution, your corpus will also be increased, right? So it will have a good impact on your corpus. And other question, my request is that for other question, my request is you can visit ICICI Pension website. On that website, we have very good calculator. NPS calculator is available. You can check, depending upon your investment, depending upon your returns, you can check how much money you will get. And I'm really sorry, but we have your email ID. Maybe some of the information we'll be able to share with you on that email ID. Abhijit, you can just note it down. Huh? You can answer some of the question on this email idea.
Yeah. Okay.
Thank you everyone for joining this session with us. Um, we will have our next session on Saturday. We'll be very happy to see all of you in that session. Maybe a new innovative topic we will cover, which will be useful to all our subscriber and potential subscriber. My request to all of you is your colleagues, your friends, your family members also to attend these sessions, which will give a lot of for the life after once they stop earning, how they should save money, how NPS can support in terms of managing or in terms of creating a wealth, the kind of offers. I request each one of you, please spread word of mouth. Every alternate Saturday, we have this session. You, your family member, your friends can join this, colleagues can join this. And with this, thank you very much for ranking this session.
Thank you so much.
We look forward to have more next session.